We're on express elevator to hell. Going down.
What is going on YouTube? It's Brendan from Market Makers. Welcome to the show, everybody. There's going to be red days ahead, my friends. We are approaching Elul 29, the culmination of the Shemitah, which is September 25th, which is a Sunday this year. Now, the last two bubbles, the Great Financial Crisis and the dot-com crash, the day of Elul 29 was the single biggest point drop in both those bubbles. Now, crypto trades 24/7, but crypto is going to follow the markets, or perhaps it will lead the markets because the markets are closed on Sunday. So we'll see what happens with that. Tomorrow is the big day. The Fed's meeting right now. Tomorrow they announce the rate hike. Powell does his press conference. I personally think he will continue the hawkish bent. He needs the economy to slow down. Inflation went up this month versus last month, month over month. And remember, inflation compounds year over year. So last year at this time, inflation was 5.9%. This year, it's 8.3%. That is a 14% increase in things that you pay for. So things 2 years ago were 14% less expensive. And guys, that's the Fed numbers. That's the CPI numbers. I buy the same dog treats, the same dog food for my two Dutch Shepherds every single week. And it's all up 30 to 40%, depending what I'm buying. So keep that in mind. Germany's new inflation numbers came out and for the PMI, and it is a massive increase in inflation. And that is the third largest economy. So if you think it only matters if our inflation comes down, goes from 8.3 to say 8.0 to say 7.8, it matters about the rest of the world because we trade with the rest of the world. And 40 countries now have double-digit inflation. Argentina and Turkey over 70%. UK in double-digit inflation. Germany's going to be in double-digit inflation. France will be in double-digit inflation. The US most likely at some point will hit double-digit inflation unless Powell steps on the gas. Guys, you have to understand a couple of key concepts in the marketplace. We have had a inflation rate above 5% 9 times in the history of our country. 9 times since the Fed was created in 1913. And every single time we had inflation above 5%, we had a recession, aka a hard landing. The narrative from the permabulls, from the permabull genius money managers that only understand bull markets, is the Fed could still do a soft landing. The Fed itself is trying to do a soft landing. And what do I mean by that? You hear that narrative all the time. That means they want to raise rates to a level, which they're calling restrictive, which is not, let's say 4%. And inflation's at 8.5% or 8.3%. They want inflation to start coming down, and they'll say, see, we're at a restrictive rate. But that's not how it works, guys. Certainly, inflation will come down, but inflation will go up, as I proved this last month. It moves in waves. Think about it like a house fire. If you have, just say, 50% of your house currently on fire, and they say, you know what, we're going to put out 50% of the fire, that's restrictive. But won't this fire potentially spread to the rest of the house and reignite the part that you put out? Well, it could, but we think this fire is going to die out on its own. So that's the narrative that they're going with. They think all of this is still transitory. They just won't say the word transitory because it made them look like idiots. It made the Biden administration look like idiots. It made Biden himself look like an idiot in December when he said, no real economist thinks inflation is going up. No real economist thinks inflation isn't transitory. And of course, it did nothing but go up since December of last year. So they retired that word, but their narrative is still the same. And the permabulls are still on this soft landing narrative, which has never happened in the history of the country. Guys, we have inflation because we printed 41% of the money supply since the Great Financial Crisis back in '08. That's why we have inflation. Certainly, it can come down with supply chain. Certainly, it could come down if we cut taxes like Reagan did. Increase supply of items, right? Because we have too much demand chasing too little supply. Increase supply of energy. Increase supply of manufactured goods. Increase supply of food. That will also bring down inflation. We're going about it the most rudimentary way. We're taking an axe when you need a hammer. And that's where we're at. But that's all the Fed has, and the government keeps spending money. So let's go ahead and talk about a couple of things. A lot of you guys always ask me, who do I follow? Who do I follow? It may surprise you. I don't really follow anybody in crypto. Maybe that doesn't surprise you. I follow more economists. I follow investors. I follow traders. I follow people that study market cycles, that understand market history. A couple of those people you guys hear me talk about, Jeremy Grantham, Ray Dalio. I'm a big student of both of theirs. A third person you've heard me talk about, I've played clips of him before, is Scott Minerd from Guggenheim. Scott Minerd also has 300 billion with a B under management. He predicted a 50% crash in Bitcoin. He also has the Bitcoin going to 8K number. He's one of the first people of the big money managers to come out and say that. He studies market history. He studies market trends. He understands cycles, okay? So listen to this clip from Scott Minerd on what he expects, how he expects this market to end. This is an important clip. It's about a minute long. Listen to this, and then I'll talk about it on the other side.
Okay. This is going to end in tears.
For who?
For investors.
Us on this show?
Yeah, well, people that are long risk assets.
Hasn't it already? I mean, this year's been awful.
Oh, well, it can get a lot worse. I mean, you know, I commented a couple of weeks ago that I thought we had another 20% to the downside in stocks by October. But, you know, Brian, when you look at the stuff that policymakers should look at, the money supply is contracting. We have inflation that we're looking at in the rearview mirror. We're not looking at inflation going forward. There's a very good chance that in the attempt to prove their credibility that they're going to overdo it. And I think at some point here, as I said back in April, you know, they're going to push it until something breaks. And I think the break will probably come through, you know, equity prices, but could come in another place. It could come in the emerging markets. So, you know, eventually this will end in tears. And one thing, you know, people that are talking about a stock market bottom, I would just point out one thing, and that is we have never had a bottom in a stock market without the Fed, while the Fed is still raising rates.
Never.
Never.
Never had a bottom in the market while the Fed is still raising rates.
That's right.
Exactly. He expects it to end in tears. He has a 20% drawdown coming. A 20% drawdown, by the way, guys, did you notice his dates? Between now and mid-October. When is the Shemitah? The exiting of the Shemitah. Between now and mid-October, he has a 20% drawdown in equities. I think Scott Minerd is well aware of the Shemitah cycle. And what else did he say? The markets have never bottomed while the Fed is raising interest rates. Ever. They reiterated that at the end. The market has never bottomed, guys. You get rallies, but it's not a bottom while the Fed is hiking interest rates. And we know for a fact they're hiking this time. We know for a fact they're hiking next month. And most likely the following month as well. You're most likely getting hikes all this year. So what would that mean? Rallies and then lower lows. That's what that would mean to me, but we're going to get a rally, as you guys know, that we track on Bitcoin and Russell. I'm expecting accelerated decline here going into the end of this month into October. That October 31st date, looking for a bottom, a false bottom, and a rally up, and then the next leg down again after that, okay? So let's go ahead and talk about a couple of things here. One thing I want you guys to understand, think about this concept, because well, we were talking about who do you watch. I told you who I watch, but think about who you watch. Who do you watch and why do you watch them? Think about that for 1 second. Do you watch somebody because they're entertaining, or do you watch somebody because they've been right? Or most importantly, do you watch somebody because they confirm your bias of the market? Don't watch people that confirm your bias unless you can look around, understand, and analyze the marketplace yourself, because the natural human bias in the marketplace is to be bullish. It's a proven fact in YouTube analytics. Bullish videos get like 2 to 5 times more clicks than bearish videos, regardless of being in a bull market or a bear market. So you have to understand that is a natural human bias. People don't buy assets. You didn't buy crypto. You didn't buy Tesla because you want it to go down. You want it to go up. So human nature is, hey, this guy's saying Tesla's going to 3x in the next 18 months. Hey, this guy's saying Bitcoin's going to 500K in a year. This guy's saying Bitcoin's going to 250K. He's been saying that all year. He's been saying that for 2 years. Think about who you watch and why you watch them, because what my goal is for you guys here on this channel is to find financial freedom. I found my financial freedom. I was able to retire from my job 6 months after I came to crypto last summer. I retired after 13 years as a vice president at an investment bank. Boom, done. Okay? I want everybody to be able to do the exact same thing, and to do that, you have to get to nirvana. What is nirvana? Nirvana is you being able to hear your best friend have an opposite view from you. You being able to watch the news and not be influenced by it. Nirvana is when you can actually learn, research, and retain the information yourself, analyze the marketplace, not let other people's views affect it, and then analyze it correctly and act accordingly. That is nirvana, and that's where everybody needs to get. Everybody can do this. I've done it. Many people in our room have done it. All of you have the capability of doing it. The fact that you're watching these videos, probably the best kept secret on YouTube compared to what's out there. The fact that you guys are watching these videos, you're well on your way. But that is the end goal, to be able to analyze these markets, decipher these markets, decode these markets, look at patterns, and profit when you act accordingly and have a plan of execution. Guys, you can definitely come trade with us and learn a lot of these techniques as well on our Discord. The join button right underneath the YouTube description. Guys, listen to one more clip, this good nugget of wisdom from Scott Minerd. I want you to listen to this, and then we're going to jump right into the Bitcoin TA. Take it away, Scott.
Well, I often tell people, don't ever hire an optimistic money manager. And I got a comment the other day. Somebody said to me, boy, Scott, nobody's ever going to question, all the great investments you've made. And I looked at them and I said, to be honest with you, most of our returns doesn't come from all the fantastic investments it's made. It's been avoiding the disasters. So we avoided you remember the financial crisis. We avoided the drawdown that occurred in the pandemic. And, that there's a time to take some money off the table. I was very, very bullish in March of 2020. But, right now, I would say
money's been made.
All right. So what Scott said there, he wants to be remembered, or he's going to be remembered by avoiding the catastrophes. That's so key to understand, because you always hear from holders or people that espouse holding, you will make money in the long run. The markets always go up. That is true, especially in equities, especially with Bitcoin since its inception. It will go up. But if you avoid the big catastrophes, you will make a lot more money. Minerd avoided the 2008 financial crisis and shorted it. Minerd avoided the pandemic crash. Minerd has been shorting the market, as well as Dalio, as well as Grantham, ever since the market's topped. Okay, your market view and how you analyze the market is very important. But most importantly, guys, I mentioned this before, a member in our room, Anna, wrote a script. If you took $100 in 1965 and put it in the S&P, and you did one thing and one thing only, every seventh year since 1965, the Shemitah year, every seventh year, which would be 72 to 73, would be your first one, take your money out August before the Shemitah year starts. Put your money back in October after the Shemitah year ends. That's not picking a top. That's not even picking a bottom, because all those markets took a year after the Shemitah ended to actually bottom. So you're not picking tops and bottoms. You did one thing, took your money out at the beginning of the Shemitah, put your money back in at the end of the Shemitah. You 3.5x'd the holder that did nothing but deposit their money in 1965 and hold it all the way through. So the people you see on TV would simply say, well, look, Jill deposited in 1965, and look how the S&P has gone up and up and up. But what they won't tell you is, oh, Anna deposited in 1965, took her money out once every 7 years and put it back in, and her money 3.5x'd what Jill did. And not only that, understand as well, 2/3 of money managers cannot beat the S&P. So if you just did that one technique, you are better. You, who may be a landscaper, you may have a part-time job, maybe you're a mechanic, maybe you're a doctor, maybe you're a nurse, your job doesn't matter. The point is, you're not a master's in finance or a PhD economist. You would be one of the top third money managers in the country if all you did was take your money out every single Schmiede year for 12 months and then put it back in. You would beat 2/3 of the idiots you see on TV telling you what to do with your money. Isn't that an amazing statistic? I think it is. Let's jump into Bitcoin, boys and girls. All right, guys, Bitcoin on the daily. What's happening? Well, we had a rally yesterday in equities, and then what happened? The rally sold off. So the rally completely gave up. Fed Chair Powell is speaking tomorrow. He's going to raise rates. I'm telling you, if he does 75, we could get a rally, guys. And on Bitcoin, it could look something like this. Up to 21,421, up to the 0.5 at 22,322. If it was a really vicious rally, maybe you get up to this fan line here, or you get up to the 618 at 23,223. That is if the market just wants to be irrational and rally, which it could. Every single CPI now, we've had some type of whipsaw, either a dump and pump or a pump and dump. So just be aware of that, okay? But if Powell comes out with 100 basis points, I think the market just crashes. If he comes out with 50, then it's going to rally because nobody's even talking about 50. So that's so dovish, the market will rally. So you got to keep all these variables in your head, okay, as to what's going on. We have the compression very tight on Bitcoin, guys, as you know. And if we look at that compression again, the tightest it has been since the beginning of the bull run. I hate having to zoom out, but let me do it for you in case anybody new's watching. As you can see, the tightest it has been since the beginning of the bull run. Yes, I did go back and look, and you can get massive expansion, okay? So let's go ahead and turn the caterpillar off, and then let's look at, what else do we got here? Let's look at, see what our gummy worm's doing. Get this loaded. You can see we're still below the median line. We have this red trend here, the bearish trend that we are still in. Obviously, this is a pretty even gummy worm here because we're going pretty much sideways, as you guys can see. So this can break, and we're also in the middle of this channel. This can break to the downside. It could break to the upside. It is a staging ground, essentially, and a lot of it just depends on what Powell is going to say and what Powell is going to do. Now, if we look at the money flow here, money flow is below the median line. You are bearish here, but you could be making a double bottom here on the money flow, looking for a little wave up, and that's a shorting opportunity. I'm telling you guys, if we rally, when we start to fade, when the rally starts to fade, something like this on a daily time frame, you get candles, they're failing. This is a golden opportunity where because I don't give financial advice, where I would be looking to short. Let's go ahead and look at the 8 hour. 8 hour, I have speed resistance fans laid out like a grid here, and you can see we're in this grid. We're about to come down and test this at 18,991. Let's go ahead and look at the weekly time frame support resistance really quickly. Talk about the weekly. I always zoom out to look at my macro support resistance levels. A couple things I want to show you on the money flow, guys. MFI. If you notice, all-time high is right here, okay? We had our money flow, we had the money flow hit its peak right here on this candle, and then we got bearish divergence on that march up. Now, if you notice, ever since that decline began, the median line in the money flow on the weekly has never been defeated, maybe slightly above, but came right back down. And where are you right now? You're starting to roll over. As you can see, I just drew over the top of it. You're starting to roll over that median line and the money flow, okay? And if you do roll over, what happens every single time you come to that median line? You go down. What happens right here? You're gonna go up and then go down. And then you're making a double top on the median line. Guys, this is gonna be that wave for October 31st that takes you to 10,591. Let's look at some Fib targets here on the weekly because this is the larger time frame. More powerful time frames are the larger time frames, okay? So you guys already know how we get this 10,591. We take the trend-based Fib from wave 1 here, wave 2 to wave 3, 1618 golden ratios, 10,591. Let's get a more current wave projection from wave 3 to wave A to wave B and see where we're at. So last time we talked, we were above the 786, I think, and as you can see, we fell below the 786 at 19,891. Next stop is at 886 at 16,284. As you lose that, the one fib is at 12,173, and then you can look to potentially get this 10,591. Or potentially even fall through it. As you know, we have the Dante's descent pattern, right? You also have here on the weekly time frame what I would call like a baby double top. You came back up and you're going back down here. You break that neckline. That's going to be the escalation of your descent, possibly to that 16,284. Okay, let's go ahead and look at the daily. Again, Dante's descent. We go over this every video, so if you don't understand what this is, go back to the 7-year apocalypse video on my YouTube, guys. Check that out and you can see it there. 11 bars down, 9 bar run-ups, 20 bars between tops. No swing high is defeated the whole way down. Another simple way you can look at the decline of Bitcoin. I've showed you this before. Let's bounce back to the weekly, be easier to show you. This is the easiest thing to do, and I see other YouTubers doing it now. Not saying I invented it, but I just didn't see them do it before. But let's go ahead and do this. All you have to do in this pattern of descent is take a trend line from wave 3 up here on the weekly, connect it to the B wave top, and look where you're at, okay? Simple trend line. This is your pattern of descent all the way down to 10,591. You can come up, you can hit it, you'll come up, you'll hit it, whatever. You'll keep going down as you get down to this 10,591 or lower, or possibly slightly higher at the one fib there, 12,173. That October 31st date is when we're going to see that 9 bar run up. You're going to break this trend line and you're going to go up for 9 weekly bars if this pattern repeats. Dante's descent, guys. This is what we're looking at right here. Okay, so it'll be that 9 bar run up depending when we bottom here. I'm assuming the 1618, 10,591, the average of all the drops, and we'll be running back up to 15.5. And here let's go ahead and go to the well, we did daily, did 8 hour. Let's look at the 4 hour. 4 hour time frame through Ichion here. Obviously you fell right through the Kumo twist area. You know, you can look at this in different ways. I take a wave projection here from the swing high, go down to this swing low, and then up to this swing high. Doesn't give you any information, right? You can take a wave projection from here, come up, or swing low there, and come up to a swing high here. It gives you a little bit more information. You hit the 382, you're above it. Other things you can do, guys, when you're measuring this out, if you can't find a clear wave and you don't want to sit there and play with it, you can always take fib retracements to see where you are. You can come up from here, come down to here, and you can see you're nowhere close to it. So then what do? You take the same fib retracement and you start from here, come down to here, and now look at that. You got up to the 618, right? So you got up to the 618, you declined, and you're at the 382. Different ways you can play with this. I oftentimes zoom out like this on the 4 hour larger time frames. I start looking at larger wave projections, basically the same way I would lay it out on an 8 hour or a daily. But I take these smaller projections as well, smaller retracements. 618, the most commonly retraced to fib, and of course you hit it and you started to decline. So 4 hour is still bearish in the money flow, guys. Bitcoin is going to move with the Russell. Let's look at the DXY real quick, and then we'll look at Ethereum. DXY, this is a 3-day chart. I went ahead and threw a parabolic curve on here. You can see the DXY has a lot of wiggle room using the parabolic curve as support. And if you just go track along this fan line that you've been tracking along, you'd be intersecting the parabolic curve somewhere around 130 spot 221. That would be insane, higher than we got to in the Y2K crash. But let's see how big these rate hikes are. If Powell goes 100 basis points, a full percent, you could easily see this get above 116. Okay, so anything is possible to come up here. And of course, you could always just fall down here, guys. But the DXY will continue to rise as long as they keep raising interest rates. And on the 3-day chart, you can see this parabolic ascent up over 17% for the year. Massive, massive gains. And let's look at Ethereum, and we'll check out the equities real quick. Ethereum's not in a good spot. You got rejected here by the 150. Take a trend-based fib. Let's go to that swing high up here on the daily. Down that swing low, up to whichever one of those is higher, 1788, 1789. and see what happened here. You fell below the 618, as you can see right here. You wicked down to the 786 at 1310, and you bounce back up, and you're making a little bit of a Wyckoff range here between these two fibs. You see that? So you want to see which way this holds and which way it breaks. But if this starts coming down, guys, the 1618, again, just from this daily shorter wave pattern here, I would look at Ethereum on a weekly and do the same thing we did on Bitcoin with the larger wave projection. But looking at this on the daily, 1618 at $802. Absolutely crazy. And I mean, it's going to get there, but that might not be the final target. I told you guys I'd do a little bit more in-depth on Ethereum and ADA. I will have to do that next video. I did not have time with everything going on, but this is what I'm seeing right now on Ethereum, and we'll go over ADA next time as well, and I'll get those final target projections set up for you on the next video, because we're already over 22 minutes. I talk too much, and we haven't done the equities yet. All right, let's look at Russell real quick. Russell, same Dante's descent pattern. Again, looking at October 31st weekly candle. Not going to spend any time on that because it's identical to Bitcoin. GAN marketplace pattern. This is my price pulse pattern, and as you can see, we're about losing the 233 right now, the 200, and this would be our descent. I'm expecting to hit this target of 1521 on October 31st, trading at 1788 at the moment. Here on the daily time frame, couple different things. You know, like I said, all of these markets are putting in double bottoms, right, in the indices. You see this? Here's your bottom, here's your bottom. Now, we tried to rally yesterday, gave that rally back up. It doesn't matter if you have a double bottom because you have to be able to come up. You got to have velocity, right? And of course, we have the 200 coming through. And based on the last short we took, and I keep telling you guys this, the 200 in a primary downtrend, key area to look at to short. Will we get another opportunity in the next couple of days to short here? I don't know, because I think Powell's going to come out hawkish, more hawkish than people expect. And I think you're going to see maybe a little baby rally, maybe up to this S curve here, maybe get some wicks above, maybe even get up to the 50. And I think you're turning back down, guys. And with the Shemitah year coming to culmination on September 25th, I think the accelerated decline will start accelerating some more, but price likes to move in these waves, down, then up, then down. So you could easily see some type of wave up in all the markets, including Bitcoin, before you spill back over, okay? So just be ready for that in all the marketplaces. And let's go ahead and look at S&P really quickly. S&P on the weekly, you are tiptoeing on the 150 moving average. You see that? There's the 150, the hot pink line. And of course, I have, like I said before, guys, I threw an S curve on here. You have support of the 200 here. You have the 618 here of 35.93. You could just come down from 38.60 to that 35.93, bounce off here, although I don't think it's going to be that strong. It'll probably most certainly be a lower high from here, because I think you're going to continue to descend at that point, because I think, again, this target, October 31st, this is not a target that I have for the S&P. I'm basing it off the Russell pattern and the Bitcoin pattern. So it could come after that, could come before that, but you can get a nice bounce here off the 200. But what we know from studying these market cycles, and we did it in the last video, what we know from studying these cycles is once you lose the 200, 233 on the weekly time frame on the S&P, you can get turbulence up and down on the line, but once you lose it and you back test it and you fail, boom, next leg down is in process, okay? So that's what you need to look for on all these indices. S&P on the daily, same thing, guys. You got the double bottom structure appearing right here, but you know, you have a very bearish candle at the moment. A lot of this waiting to see what Powell does. Could easily just get some type of wave up to here, wave up to the 50. If what Powell says the market likes to hear, or just wants to find an excuse to rally and then roll back down. And of course, the other option is you can just literally roll down, because Powell comes out like he did at Jackson Hole and said, I'm going to keep this brief. We're going to keep raising rates. I don't care if the market crashes. That's not what he said. That's my words. And then, of course, the market will roll down. Okay? So we'll see what Powell does, but he needs this to happen, especially with core inflation doubling month over month. I think the Fed is really starting to get worried about sticky inflation, and it's something that they're going to act upon. They don't want to be viewed as the losers from the 1970s that wasted a decade trying to fight inflation. Long video today, guys. I hope you noticed, but I answered all the questions in the comments section last time. Check out our two sponsors, please. BitGet for all the crypto, link in the video description, and SimpleFX to trade these equities with us. Link in the video description, instructions in the video description, as well as a tutorial guide for how to use SimpleFX and get up to $5,000 on your deposit. Everything's in the video description. Good night, guys. Good luck. Another video coming soon.